like a good public service announcement. It is not a good idea to co-own property with somebody unless y'all are investment partners and maybe you're doing it under an LLC. I do not recommend that unmarried people purchase property together. Now, that may be controversial, but I'm just telling you from experience, anytime I do a closing or people are not married,
they almost always have to sell
I
the
get a
property.
call about 6 months later, and they are like, how do we get from underneath this situation? And
Why is that? I feel like the rule is like literally within a year, they're calling you to sell the property. And of course, they never got married.
Right.
They are still boyfriend and girlfriend, but they decided to get on the loan together.
The Haitian Kings. The Haitian Kings. The Haitian Kings. It's the Haitian Kings Podcast.
All right, ladies and gentlemen, welcome to another episode of the Haitian Kings Podcast. My name is Vadim Hector, and my co-host is Val Richard. Come here. So the show we have for you today, is very special. So the reason I say the show is special, there is I know the economy we have these days is not that many people that can buy a house. But let's say, for instance, you come up with some money, so you would like to buy a house. So there's a lot of people that don't know what to do. So this is why the guest we bring to the show today is going to walk us through that process. Without further ado, Mayor Marshall.
Well, thank you for having me.
Thank you for coming to the show, man.
It's a pleasure to be here. I don't get to do many interviews based on what I do. In fact, I don't even think my mom knows what I do. The life of a title attorney, it's pretty humble.
So before we get to the, with everything, so who is Mayor Marshall?
Man, that's a big question. I've been on this earth for 45 years, but I am a father to 4 children. I have a lovely wife named Misty. She actually is in real estate as well. She does real estate closings, but she's too expensive for me to hire. So she just kind of does, her own. I was pretty much raised in New Orleans, and I attended LSU in Baton Rouge, where I got my undergrad, studied history, and then I went to law school at Southern University on the Bluffs in Baton Rouge. I've been practicing real estate law for about 18 years.
Nice.
And presently I have an office in Lake Charles. I have an office in Lafayette, and I have an office in Alexandria. So we have a few spots around Central and South Louisiana where our focus is making people's dreams come true with home ownership. It's a very rewarding job.
Yeah, that's a good, so we can have, that's the best segue to put the second question I would like to ask you. So in a simple term, what is a title attorney?
What does your mom think?
Well, finally this year, I was able to help my mom purchase a farm in Louisiana. So I think she officially knows what I do, or sort of. But for a long time, she knew I was an attorney, and she knew it dealt with real estate. But as far as what title attorneys do is we basically conduct a complicated transaction with many players: realtors, lenders, appraisers, inspectors, surveyors, and insurance. And we try to take all these different players and put them into one spot where we can process a file, have people show up at an office, close the file, in other words, sign paperwork. And ultimately, the analogy that I like to use is we're kind of like the maestro of an orchestra. You've got a lot of players, and we want to try to organize that transaction. We also want to protect the homeowner by conducting title exams of the property and basically make sure that the sellers actually own the property, and that if the sellers do have any clouds on title, mortgages, judgments, or loose ends that need to be tied up, we want to protect the homeowner to make sure that the largest investment in their life is taken care of. That their financial investment is sound. So, that's kind of like a broad picture of what we do without going into too many specifics.
I was waiting for Hector to say a cloud. What is that exactly? A cloud on title? And I'm sure we're probably going to get to that. Peter, when does the average person call a title attorney?
Wow, probably never.
Come on, never, Peter?
Yeah, I find that the only players in the game that would contact a title attorney might be commercial clients, like commercial investors who may do this regularly, and maybe they have their favorite attorneys that handle complex situations, negotiations, review of contracts. But quite honestly, Val, the average person is going to be reaching out to either a realtor or they're going to reach out to a lender because they want to find property or they want to get qualified to finance property. And so I just find it more uncommon that somebody would reach out to a title attorney first, because typically what I'm going to tell them is, well, hey, look, do you have an agent? You may want to have that person negotiate a contract for you and put the contracts together. Also, if you want to view homes, you're probably going to need to get pre-qualified because most people don't want, or most agents won't let somebody see a home without proof that they have the funds sufficient to purchase that property.
So if somebody have a normal people, average person got a realtor, so technically he doesn't really need to have a title attorney.
Well, not so soon. I think you would be putting the cart before the horse, right? But it's funny because I thought you would have said like they would call you first for like a succession, or like in Louisiana we do successions, in Texas we do probates.
Yeah.
So I thought that maybe they would be flipping through we don't have yellow pages anymore, but Googling, like, where can I go and get a succession done? So do you have random people just call you for that?
Yeah, occasionally you'll have people reach out who need succession paperwork, or maybe they want to donate property to their children and allow their children to then go put a home on it. So yeah, there are a few exceptions to the general rule, and those are good examples, like you mentioned, the succession, where somebody might reach out and say, hey, we're interested in either selling this property or we want to purchase property. And then they would reach out to an attorney. The only thing I would add to that is, even in a succession situation, in Louisiana, typically it's buyers that get to choose the title attorney. And so even if a seller really likes me, or I've done a lot of legal work for them, they may want to dictate where that where the closing goes, but it's still up to the buyer to be able to choose, okay, since I'm going to be paying for this legal work or for the title work, I'm going to choose the attorney who's going to handle the transaction. Also, they probably may not trust the attorney that the seller is suggesting, because maybe, you know how people are, they're nervous about, what the other person may be presenting to them. They want to get independent research of, again, and I'm going to refer to this regularly, what's probably going to be the largest investment of their life.
So, and then what is succession? And
Yeah.
then can you explain a little bit?
Well, Val mentioned probate, and in Louisiana, we're civil law, so we have all of these special terms that are unique to Louisiana. But succession is essentially the probate process. If somebody passes away, if they die, the succession is going to be basically settling their estate, determining whether or not they have a will, whether they didn't have a will, who their heirs are. There's special bequests, who's going to receive real estate or maybe vehicles, movable assets, bank accounts. And ultimately, succession comes up pretty regularly in what I do. And the reason why is, again, the largest investments or the largest assets that people typically have is going to be real estate. So it's very common for, let's say, mom and dad have passed away, the siblings get together, none of them are going to purchase the home, none of them live at home. So let's sell the home and then divide the assets. And we regularly step in these matters and help the succession take place. And there's many ways to go about it, but ultimately the goal would be to at least in my instance, to get the real estate sold, to get it packaged up so the proper signers are coming to the table and you have the right authority to sign on behalf of the succession, and ultimately make sure again that buyer is going to have clear title, no clouds. We like clear title. Okay.
What mistakes do you see? Like, why would a buyer want to have representation as far as going through a title company? Like, why is that important?
Oh, you'd be shocked at the mistakes that can be made whenever people are transferring title. What's really funny is whenever you have family property, this is when I find the majority of mistakes are going to take place. And again, it's because of the familiarity amongst the parties. And whereas before I was saying that people like to get independent research because maybe they don't trust somebody that they don't know. Well, whenever you have property that's owned by people that don't know each other, or you have a chain of title where that's generally been the case, everybody's doing independent research and the title work is typically going to be clear. But let's say that, grandma and grandpa own the property, and then the 8 siblings, each of them got a piece of land, and maybe there's a couple deals that were struck that weren't filed at the clerk's office, but everybody just knew, well, that was grandpa's word. And then, someone else passes away and the kids show up, and all of a sudden I step in and everybody's claiming, or at least a purchase agreement might be presented to me saying, these 4 people own this property. Well, I'm looking at title work and I'm like, look, that may have been what the family has an understanding of, but that is not what has taken place. And so we order what's called an abstract, which is ultimately like a third-party service who goes to the courthouse, they pull the records, they present it to a title attorney, and then we go through that record and just make sure that there's a perfect chain of title where all of the parties, the right signers have signed, and then if there are any, let's say, like skeletons in the closet, like a judgment, or maybe a mortgage. Maybe somebody didn't pay, a laborer for construction and there's a lien on the property. And so we go make sure that if there are any of these issues, that they get resolved, that ultimately these individuals get paid, mortgages get canceled, contractors, get their money, and these liens are removed.
Okay, so I pretty much that question. The next question I was gonna ask, I feel like you kind of answered in a sense, like, what can go wrong if someone like skip the title work?
Oh, okay. The best way to answer that question is just I've got so many like horror stories of individuals that will skip a title search. And here's a perfect example. If you have cash for property, you can do whatever you want. Lenders are going to protect themselves, and they're going to make sure that products such as title insurance is purchased. They're going to require title searches be done, or title opinions are rendered by title attorneys. But technically, let's say that you see a piece of land that you want. You could reach out to a notary public, tell them to draft a cash sale, hand over $25,000, and ultimately that notary can have the proper signing of that document filed at the clerk of court's office. Now you have a piece of paper that shows that you own the property. But one example, this happened probably about maybe 10 years ago. It was an acquaintance of mine. It was a neighbor. And this individual had come into quite a bit of money through a settlement. They were very interested in moving quickly on purchasing some property. It was a $25,000 purchase. It was raw land. And I strongly recommended, I said, look, it's going to be, and I'm just going to throw some numbers out there. It's going to be roughly $300 if you just want to draft a cash sale and file it at the clerk's office. But, it may be like $700 if you want to do a title exam. And these were kind of like friends and family discounts that I was given. And I said, you really need to get a title exam. It'd be kind of crazy for you to give this money to somebody that you don't know, or maybe you do know them, but you really need to check this out. And at first he said, okay, let's do it. Let's do a title exam. And all of a sudden I got a phone call from him. He said, hey, cancel that. I want to sign this afternoon. I know these people well. Let's do it. I said, okay, I'll do it. So we drafted a cash sale. I had some indemnification language in there, just basically stating that no title exam had taken place. And we signed that paperwork. A week later, I got a call from a loan officer that I know. And he was higher up at a local bank. And he said, Peter, he said, I noticed that your notarial signature was on this document. Are you aware that we're going to be foreclosing on that property in 2 days? I said, no. I said, we didn't do the title exam. And so, unfortunately, they did foreclose on that property. Now, the individual, and I don't want to go too far off into the weeds, but that was bank-owned property after that foreclosure. And the individual, my acquaintance who gave that $25,000, sure, they have a claim against the individual that they gave that money to. But keep in mind, how much money are you going to get out of somebody who can't keep up with the note and was just foreclosed upon by a bank? Probably not, you're going to struggle getting it. So that is just one of infinite examples of why you need to get a title exam, because that's a relatively small transaction. 25,000. People are purchasing $500,000 homes, $250,000 homes, $100,000 homes, and it's a lot of money. So you definitely want to protect that.
I feel like they when he probably like say yes, and I think he probably go talk with that person that was making the deal with him.
Yeah.
And he probably brought it up, and it was like, oh, you don't trust me? Probably play on his emotion and stuff like that, and call you and say, saying call you to cancel it, but then he just got play on that situation.
Yeah, and that's why I mentioned the family situation, because they're like, oh well, no, that's my uncle. Trust him.
It's funny that we're talking about this because fraud is like a big issue with title these days. Like we've actually gotten phone calls where someone will say, hey, I have this property that I want to list. They know everything about the property. They have the tax records. They know the size. They know who the neighbors are, right? And a lot of times if it's raw land, they sometimes even with a house, you may or may not ever see these people, right? Like that's just the world we're in today where we can have a transaction and you never see that person. And I want to ask you, Peter, like what have y'all seen as far as like fraud goes with title and people claiming to own a piece of property and wanting to sell it?
The biggest issue that we've seen lately is just like you mentioned, a scam that's out there right now. This is what you're looking for. It's going to be vacant property. It's probably going to be owned by an LLC, and it's going to be a quick turnaround cash sale. And so ultimately what's happening is someone will attempt to list property, and a purchaser will come in to buy it cash. Mm-hmm. And kind of like you were mentioning, there's discussion, kind of they're trying to trick them. Hey, I've got multiple offers. I'm only accepting cash offers. We need to close 5 days. You can get a steal on this property. So they're really sweetening the deal, but trying to get it done quickly. And the reason why is because they can forge documents showing that they, let's say, are representatives of that LLC or corporation or company that owns the property. And then they can submit that to a title company like us. Now, the purchaser is in good faith giving money to us. And then ultimately, it's we need to do our due diligence to try to determine if these individuals actually own the property. But if we're being provided with, let's say, company resolutions that match, the Secretary of State records, it's difficult
so
to try.
Paperwork's good to go.
That's right. And then these individuals, they have their own notaries, they're out-of-state notaries, right? And they can forge these documents. So one thing that we're kind of keeping an eye on is quick cash sales owned by LLCs where we never see the seller. That's big red flags, because that's just something that is kind of maybe like a new way that people are figuring out how to scam buyers.
Because I've actually heard of instances where they've actually closed, meaning people have paid like a good amount of money for property that they think that is available for purchase, and this person who could be overseas, for God's sake, now just made off with $50,000.
Yeah. There was a story. It was around Lake Charles. It was in Jeff Davis Parish. And this individual came in on a Friday. Of course, it was kind of close to 2020 when things were still just a mess. Courthouses were kind of shut down. And so filing was difficult. But basically, this individual came to our office. He sold land, $15,000, nothing too big. And then he immediately went to another office and sold it again. And so, and it was a good investor client of ours who was the purchaser. And what ended up happening is the other company that closed the deal ran to the courthouse. It kind of seemed like an inside job and filed first. And so when we filed our paperwork and our client went to basically the home to go start gutting it, he was met with somebody who they were ready. There was somewhat of an inside job on this. They had their paperwork ready. They said, we own this home already. Here's the signature. And so my client reached out to us and said, hey, what's going on? Now, fortunately, there are layers of protection that my client had. He's an investor, and he took our advice and he purchased something called title insurance, which ultimately protected him. He got his money back, which is good.
So, but that person that do that, can he go to jail for
Absolutely. Okay. This person had already left the state, and we filed a police report. But the likelihood of my client getting that money back, again, cash sale, if he hadn't done a title exam and hadn't purchased title insurance policy, he'd be out $15,000, which for anybody, I'll take it.
Any day. Entertain us, Peter.
Yeah.
Real estate wise.
Yeah.
Why are deals falling apart? Like, what do you see?
Why are deals falling apart? Generally, I think kind of the less fun topic of deals falling apart. I think inspections, they'll kind of reveal issues with property.
But we want crazy stories. We don't want that's your average, right? So we tell people, hey, usually it's going to fall out because of inspections and appraisal, all the good stuff.
I'll tell you. You want to know ideal? I know what Val wants to hear. Here's why deals are falling apart.
Tea.
You ready?
What's the tea?
Because they're not using agents, okay, to negotiate their deals. Because every seller thinks that they are sitting on gold, okay? And people, as far as the art of negotiation goes, they get their feelings hurt. So let's say I have a list, I want to list my property for $300,000, and somebody lowballs an offer. Well, now they're offended. And then negotiations start to break down. Whereas a cooler head might say, all right, you're offering me $250. Well, maybe I'll go down to $290, and let's see what their next move is. Are they going to stay where they're at? Well, we're not even close. Oh, are you coming up 10 again, and now you're going, $270? All right, well, let's keep trying to get to that middle ground where everybody's comfortable. And
but if somebody say 300,000, so let's say for you to be able to negotiate, so I would say okay, I want 300,000, but as the seller, I can say I don't want to go lower than 290, right? Yeah. I can say maybe I don't want to go lower than 285. So, but even that person is trying to say 270, but if it's the seller have to agree with the price, right?
That's right.
Yeah.
And even if somebody says I'm not going to go lower than this, doesn't hurt to ask. Maybe you will.
Yeah, I know. One time, the story that happened to me in the house, when I was buying my first house, and I think the price was $275 at the time, and I think it was around that. And I didn't want to spend that much money, to be honest, because that was my first house, and I was scared, and I feel like, man, I don't want to pay a big amount of money on the mortgage. But then, so I make the offer, and then they said they got somebody else that can make an offer. And I felt like I was being played. And I said,
"Wait, did you feel like they really did have another offer?"
Yeah, I feel like but the thing is, when I thought about it now, I felt so the house has been in the market for a while. But then, so I was supposed to go see the house on Thursday, but I didn't, and went see it on Monday. But on Saturday they had an open house, so where everybody come looking at the house. So when I went on Monday, and I was like, I fell in love with the house. I was like, stop everything, I want this house, right? But then we make an offer, and then even though I didn't want to spend that amount of money, but I love the house so much, I said, But so she make the offer, I think it was like $275. I don't remember the number.
Had you been watching that house, or it had just got on your radar?
I think I probably maybe like, I don't say it's been in my probably like 2 weeks or 3 weeks. But when I went in, it was like
So this is what happens. This is what usually happens, right? So they probably did a price adjustment, right? It got on your radar because of the price point you were at, right? Because like you said, it had been on the market.
Yeah.
So then they do a price adjustment, they do an open house, and now we get multiple offers, right? And you're like, the hell, it's been on the market for like 6 months.
Yeah.
All of a sudden, everybody had some interest. No, it's because they finally priced it well enough to sell. So now you get more than
So when they said $275, and then they said somebody else make an offer. So do you want to increase your offer? I'm like, how much the offer? They can't. They said they can't tell me, and I felt like, to me that sounds fishy. Like, why you can't tell me? Tell me the person says $290. I say, okay, I don't know if I can do it. Maybe $291 or something like that. Yeah. So let's bid on it. But you said no, you can't.
But your agent didn't have the listing though, right? So your agent didn't have that listing, correct?
She did have the listing.
Oh, your agent also was the agent that was listed?
Oh, no.
Yeah, so chances are they don't know.
They don't know. She say, I'm not supposed to know, but in the back of my mind, I felt like I was being played. But, I still was stuck on that. I felt like, there's no way. Why you can't tell me?
It sounds like he's still stuck on that.
Oh, yeah.
This still comes up?
No, I'll let it go now. You know what I mean? Yeah, well, I don't know. But he was like, I was very impressed with the house.
What's kind of exciting is that scenario that you just mentioned. When you're on the sidelines and you get to watch negotiations take place and who's going to flinch and who's going to call a bluff, when you just see it happen day in and day out, but you're removed from it, you learn a lot about people.
I love negotiations.
And I think it's great. And when you some people just have an innate ability to negotiate. But when you are exposed to it that much, you really get a good sense of who's bluffing and maybe who's being unreasonable. And it's fun, behind the scenes just to kind of predict like, hey, this is how that's going to go down. And when it happens, you pat yourself on the back. I knew it. I knew that they were lying. I knew they were bluffing.
Yeah, the only problem I
do you really feel like some agents like really be bluffing? Like I've never bluffed on a negotiation. Like we strategically do things a certain way, so we don't have to bluff. But I always say like negotiations is like being at the spades table.
Yeah, I think though, I think the problem is, you ultimately have to do what your client is asking you to do, even if you don't agree with it. And maybe you don't have to. Maybe you don't. Okay, or you're good enough at telling them this is a terrible idea. But at the end of the day, if they're adamant and they're like, Val, this is how it's going to be.
I don't know. I've never met a client that negotiated better than me. Like, I'm not, I don't want to toot my own horn.
Right.
But usually if I'm on a deal, like, they respect me enough to, one, they're going to say, like, well, Val, what do you think? Right. And I'm going to say, hey, in my experience, here's how that has panned out, right? So chances are it's probably going to play itself out again. And I think if you've been doing something for so long, though, like, you just, like you said, like we usually know how things are going to, and you know how many times Peter has walked me through something like, well, Peter's a lot cooler though.
I'm waiting for her to do an impression of how I talk. It's coming. I
can't really do that. Hector probably can pick up on you better than I do because he could just talk like the other guy we were talking about.
What other guy?
My doppelganger.
Wait, who did you say, Peter?
Yeah. So, but the only problem I have with it is because, like, let's say it's $275. I don't want to. That's what's gonna keep me. Let's say I say, fuck it, $290.
Yeah.
And then you find out, oh no, he was only $276.
It's a competitor in you. That's what it is.
So you tell me I put $14,000 more. You know what I mean? I just feel like I don't want to go in there blindly. I didn't like that. But even though right now, even though I lost the house, I still felt like the fact that I would have felt more comfortable if I know the price and I chose not to go in. Let's say it was $290. I said, okay, you know what? It was out of my price range. I was already stretching out already. I'm cool with it. But let's say I still this day I don't feel like, even though I missed the house, but I didn't feel like I lose the fact that I don't know the price they offered. And
you know what? I would usually ask somebody, like if we're in if we're in a bid situation, because it's honestly, a lot of times it's not always just the price. There's other things, there's other terms, how fast you move, how much of the deposit you're going to put down, how much is going to be like non-refundable, like all the things, right? So it's not always just the price. But I always ask them, like, okay, if your highest bill may have been $275, I would say, well, Hector, tell me, how would you feel if you lost it at $285? You'd be like, man, I'd be pissed if I lost it at $285. Okay, then I think we should probably go in at a $285. What do you think?
Yeah, that's
pretty good.
Yeah, that's
you see that?
That's
Experienced
that's
agent
how
over
pretty
here.
good.
It's good. And I mean, unfortunately, if you really have your heart set on something, you might spend extra, to
Yeah, because
get
there's
it.
certain situations.
Yeah, but 275 was already a limit. 275
He's
was
not
me.
letting
Like,
his
No.
friend go.
275 was me trying to.
Tiffany, he didn't sleep.
But I do like
Yeah,
how Val
275 it was
presented
like
that.
me trying to reach that table. Like,
And
know,
look,
if you say
Peter and I are
285
going to be nosy enough now to say, let's go look at
Let's
this
go look
damn
at it.
house
Let's
he's
see.
been talking
Let's
about.
see.
yeah, I didn't even know how much they sold it. Yeah, I never go back and I don't even.
We're going to pull it and we're going to tell you if there was closing costs that was paid, like how the deal was structured, okay?
Yeah.
You know, the flip side of that is a lot of times the seller, they know that their property is valued higher than what the buyer offered them, and they still went with that low ball offer. And when we sit at the table, you'll see the seller, they'll ask me, they'll say,
What is the
hey,
appraised? They'll ask
what
you
did what did that appraise for? Well, that's confidential. I can't tell them. And so I'm like, look, if you want to know, you got to ask the buyer. And a lot of times the buyer
Yeah, a
doesn't
lot of
want
times
to tell
the buyer
them
won't say anything.
because let's say, the appraisal came in at 300,
Yeah.
but they only offered 250, and they know that seller's going to be furious knowing that they lost out on 50.
Oh.
So it's interesting to watch and see. But
Yeah, but the seller can do an appraisal itself, though, right?
they can. Yeah.
Yeah, I mean that's what I would do.
But here's the thing: they got to spend money to do it, and a lot of people don't want to do it.
If I'm selling something for $300,000, yeah, I'll do an appraisal, even though if it was $2,000.
But it's so tricky with an appraisal though, because like if I go into a property and they say, well, look, we have it appraised for this, oftentimes like the appraisal is not taking into consideration a lot of things, right? So we always say a house is only worth what a buyer's willing to pay for it, right? So if you have a house that, hey, it appraised for all day long, $350,000, but guess what? Nobody's willing to give you that. Then guess what? It ain't worth that.
Yeah, that's fair.
Or a lot of times, like even with appraisals, they don't, especially like in rural areas like we're in, they're like, one time I had a house, it was like $500,000, right? That's what they were listing for. But y'all, it was surrounded around trailers. Like nobody and it appraised for that. They had purchased an appraisal prior to going to market. Well, guess what? Nobody wanted to pay them that. So it's not worth that.
Yeah, but the appraisal doesn't factor all that on that too?
Yes and no. Like in that situation, it appraised for $500,000.
Yeah,
I think like Val
so-
said, it's only worth what somebody's willing to pay for it. If it's just an ugly house.
So
but
they
it's
had to
got-
find comparables in the area, and obviously the trailers were not comps to that house, right? So they found, and then it was a pretty good sized house. Like I want to say 26 or 20, I think it was like 2,600 square feet, something like that. And the trailers wasn't comps, so they had to go out and find the comps, right? But guess what? Nobody was willing to pay you
Right.
that. So sorry, Hector, it ain't worth that.
Oh man, I must say 10. Unless if I'm losing money on the property, like you paying, you're losing money. But maybe then if I stay like, if I say 500,000, and it's worth 500,000, it'd be hard. Like 450, you lose 50 grand.
Yeah.
Man, because I'm trailer.
But circumstances change. You might have to, get a job somewhere else, or you're unemployed, and
Yeah.
you're hemorrhaging money, and you just got to unload it.
So I mean, so let's say, let's say, when you're buying a house or buying a property, there's closing costs. So what you paying? What you really paying with a quick?
What you paying for? He really wants to know, Peter. What's negotiable? What's not?
Lately, I'd say that it is more, and I could be wrong, but what I'm seeing is it's more of a buyer's market.
Okay.
And that's because interest rates, while within the last, let's say, month or two, they've gone down a little bit, get them in the fives, whereas they weren't there necessarily before. In a buyer's market, what you'll typically see is a seller will agree to pay for some of the buyer's closing costs, or all of them. So lately, that's what I've been seeing. And what's tricky about closing costs is if there's no lender involved, then really all you're talking about are what we call title charges, which it's our fees and the clerk of court fees. So you're paying me, you're paying the abstractor, you're paying maybe a title insurance company, and you're paying the clerk of court to record the deed. And that's, pretty reasonable depending on the cost of the home. It's generally going to be maybe a couple thousand, $2,000 to $3,000, to cover title charges. What gets confusing is when you get a lender involved, not only is the lender charging money to make money, but they have what's called prepaids. And so you're having to put a lot of money up front for insurance, for your property taxes, if it's going to be escrowed. And that can be pretty expensive. So sometimes what I'm getting at is people may see closing costs that say $15,000. And they're like, whoa, like I just gave why is this so expensive? But in reality, maybe the only costs that was going to third parties was closer to, let's say, 6,000, and 9,000 was money that they were going to use in the future for potential flood insurance, homeowners insurance, property taxes, so it's not it's not like a cost going like as a part of doing the transaction, although it is money that they're having to shell out. I don't know. Hopefully that answers your question. It does get kind of tricky. Just know that if you don't have a lender involved, you're looking to spend a couple $1,000s. If you do have a lender involved, you're probably going to spend more. However, there are some loan programs, and I'm not a loan expert, but I see them come through a lot, such as VA and rural development, where you can purchase a home and bring $0 to the table. And the way that you do that is with a seller covering your closing costs. And that's a beautiful thing. I mean, imagine purchasing a home. Your note or your monthly payment is going to be lower than what you'd be renting, and you're getting this big house. It's awesome. People are so excited when that happens.
Can you explain to people, so what's the difference? Because a lot of people don't know between a lender title insurance and then what sellers would pick up for title insurance.
Yeah. Because lenders, they want to protect their collateral, it's the home. They're going to make a person pay for their insurance. They're going to make a borrower escrow, homeowners insurance, property taxes, because they know that if the lender's loaning, 90% of the money, that a homeowner might be like, you know what? I don't feel like paying for homeowners insurance this year. I'm going to roll the dice and take my chances. Well, if that house falls down, the lender's stuck with the bag, right? The homeowner, they lost a little bit of equity, but it's the lender who takes the hit. So to answer Val's question, lenders, they make a homeowner also pay for what's called title insurance. And this is that thing that I mentioned before that kind of saved my client who had experienced fraud, by that individual selling two properties. Well, title insurance will protect the lender in the event that there are title defects and their collateral is compromised. They basically have an insurance policy that'll help them out. And then you as a homeowner, you can pay for title insurance. You get a discount because you have to pay for the lenders anyway. So they're kind of like, I don't want to call it a 2-in-1, but you kind of like pay a reduced price for your own policy. And again, it protects your home. And the big time that this comes up is if you're going to sell or refinance your property and there is a title issue, the beautiful thing is you either make a claim or that title insurance company's ultimately they're just going to help you get that property sold or so you can refinance. So it's good. It's a very kind of niche subject, but it's something that comes up when you're going to be purchasing a home. I always recommend it. I think it's a good idea to always recommend it, and that way if they need it, they got it. And if let's just say this, if you advise them not to get it and they needed it, they can't go to you and say, why did you tell me not to get that? I'd rather just be like, hey, you should get it, but you don't have it.
Yeah, whenever I'm like at the table and they ask me what that is, I'm like, you should call Peter.
Yeah.
I want to steer you one way or
another. And I got a million
another.
scary stories to tell them where like, hey, you should spend a few extra dollars to protect, again, the largest investment of your life.
Yeah.
Can we shift on? This is the juice. This
Yeah,
juice
go
right
ahead.
here. So let's talk about. It's actually not funny.
The juice, okay.
Like we get this all the time. So have property. Seller passes away. Buyer passes away. There's no will. What's happening?
Yeah. Generally, what's going to happen in Louisiana, if you have a will, for the most part, it's your assets are going to go to whoever you direct them to. That's like the general rule. If you don't have a will and you have children, your property's going to your children, okay, for the most part. If you don't have children, then it's going to go to your siblings and your parents. Okay, now I'm summing this up big time. So any attorneys that are watching that handle successions regularly, they might be screaming and saying, well, that's not 100% accurate, but for the most part, that's the case. Today, I actually had 2 phone calls for successions where somebody passed away and there was no will, but the person that's going to be inheriting the property is a minor. Well, minors can't contract to sell real estate. They can't enter into contracts, period. And so in this instance, what we're going to need to do is have a tutor designated, and it might be the natural mother or it might be a relative. And then that person ultimately can enter into contracts on behalf of that minor and sell real estate. So we deal with that pretty regularly. Usually when people pass away, the classic scenario is going to be mom and dad have died and the siblings have come together to sell property. And I have a rule. If there are more than 4 people at the table, there is always going to be one person that is going to be overly dramatic. Like a problem child. I guarantee.
Your rule of thumb is more than 4? What's the most you've ever had at the table?
4 or more. Oh man, I don't know, 16.
I've had 16.
Those are. It's kind of like herding cattle at that point. Just get them in, find out who the troublemaker is, get them in and out first.
This is why I say this is the juicy part, right? Peter, how many times do you go and you're trying to do succession work and then like kids pop up that somebody didn't know about?
Oh,
it happens. I mean, I had one scenario where this was wild. This is forever ago. It must have been like 13, 14 years ago. But I had a situation where there were 4 siblings, and 3 of them had come to me and said, "Okay, we're doing dad's succession, and so let's make it happen." Well, when I went to the 4th sibling, that person told me, they said, "Hey, look, I can't sign this paper because one of those quote unquote siblings is not actually, they're not recognized like as the child of my dad, like the person that passed away. And he never formally adopted that child. And so they were like, I'm not going to give a portion of my inheritance to somebody who like doesn't deserve it, even though the other siblings were willing to say, no, that person is our sibling. And what I figured out at the end of the day, and the details are, I'd have to kind of sit down and like sketch it out. But what ended up happening is that child actually was the child of the person that passed away, the dad.
Wait, so...
But in an effort to scam the system, the dad didn't sign the birth certificate. They weren't mom. They didn't sign the birth certificate so that they could collect some type of benefit. So
it's
as a result,
some kind of not even legal adoption.
And I don't know. Yeah, I don't know exactly what it was, but what was interesting, it was sad because basically, in an effort to game the system this way, that child was never recognized as the child of whoever passed away. And so as a result of the sibling that knew all this, they were like, no, legally, that's...
Wow, so they went to their grave knowing that legally this was their child,
Yes.
but in order to beat the system, they never told anybody,
right,
even the government, that that's actually our
They
child.
didn't tell the government it was their child. Everybody knew it was. But the one sibling.
There's a reason why he didn't. This is exactly why he never knew.
But this sibling is cold-blooded.
Yeah.
I mean, he's
they're like, hey, I'm not signing that because I want a third of the inheritance instead of a quarter.
Damn.
Yeah.
That's
But
cold-blooded.
it's crazy
Is that
because
wild?
That's
they
cold-blooded,
knew.
you know?
This is one of those situations in the family where you know who not to tell
Yeah.
because had he known, like everybody would know. That's actually not hilarious, but I've had situations where we go under contract, we do inspection, we do all the things. We're like ready to close. Call the title company and tell them we're early. We're ready, right? Oh, we can't. We just found 2 more kids.
Yes, that happens. It happens all the time. And then, I mean, if I have a 99% interest in property and you have a 1% interest in that property, and I want to sell it, I need your consent. So you still could hijack that closing and hold it hostage and say, I'm not signing anything unless I'm getting 50%. And I have to figure it out. Am I gonna make a deal with you and just take 50, even though, I'm entitled to 99%? But I need your signature, So that happens a lot of times where siblings, maybe they have judgments against them, like $20,000 judgment. And they're like, I don't care. We're going to pay off my judgment and I'm getting the same amount of all of y'all, or I'm not signing. So there are, you kind of asked, are there's these things that pop out of the woodworks during successions or when siblings are involved?
I always said that's where the reality shows need to be. Like you really want some tea? Go to the title attorney office and watch them do successions.
It gets interesting. We at the table, I'd say 95% of the time, it's wonderful. Sellers are getting a check. I'm like Oprah up there, just like you get a check, you get a check, you get a check. Everybody's getting paid. Buyers are getting keys. Champagne bottles are popping. It's awesome. But 5%. We got a box of tissue, like ready to go. And we got multiple conference rooms in case we need to separate.
They can't even be in the same room. I don't even though you have different conference room, I don't even want to be there the time that they get there, even if we're in separate rooms.
Hey, you still watching, right? That means you're enjoying it. So follow, like, share, subscribe.
All right, let's get back to the show.
So let me ask you this. So what issues do you have and see where they inherit and the family just don't go about getting the proper paperwork? Maybe they do know somebody who's a notary and hey, can do it, but didn't file the proper paperwork. Like, what do you see in that regard?
We see that pretty regularly, like I mentioned with the family-owned property. I'd say the most tragic situation that I see with family-owned property is, imagine that you have a piece of land and a home and it's worth, let's say, $200,000. Okay, like a lot of money. No mortgages on the property. So we got equity. And that property was owned by grandma and grandpa. They had 8 kids and they never did a succession. And then 4 of those kids passed away, but they also had kids. And so now you have 35 owners of a piece of property that's worth $200,000. And some of them have moved to different states and some of them are there. And one of them lives on the property and has been paying the property taxes and keeping it maintained. And they're, like, hey, I'm the one holding this together. I'm entitled to some money. let's sell this property, but I want my portion. Can you imagine trying to get 35 people who are throughout the country, all right, and maybe one of them owns a 1/200th interest in the property, okay? So once you start doing those numbers, their payout is kind of small. But some attorney that they don't know from Louisiana reaches out to them and says, hey, I need you to sign this document. And the sales price is $200,000, but you're only going to get $2,000. You think they're going to sign that paper? They're like, whoa, hold on. I need to go research. I want more money. And what I'm getting at is the reason why it's tragic is typically you can't pull this together in order to sell it and get these people paid. That property eventually is just going to go to tax sale. And then, an investor is going to pick it up for pennies.
So everybody loses.
Except for that investor.
Crazy.
Yeah.
You will find people that would just say, fuck it. Let's if everybody's gonna lose it, they're not gonna take the $2,000.
Oh, for sure. Absolutely.
They rather take zero than take the $2,000.
You ever seen instances where they lose property because the proper pays? Well, I guess this would be the instance. Then
that's it.
Answer.
I was just talking to my neighbor, and there were 4 properties in Acadia Parish, Lafayette Parish, and the exact same situation. And my advice to him, I said, hey, just let it go. Quit paying that tax bill. Like it's a lost cause. You're never going to get that back. There was one other plan to potentially get it, basically where like he would become the investor to go try to purchase it at tax sale. And
I guess unless the 34 of them would have gifted it to one. They should have just gifted to the one that's been there.
Or, sign a deed, get paid. Because, hey, you are entitled to some money. But usually what will happen is under that scenario that I mentioned, there's about, let's say, 8 successions that need to be. We got to get signatures for that. Also, the cost of 8 successions is going to be tens of thousands of dollars. And who's going to pay for that?
I guess as Peter was saying, it ends up at the tax office because you're talking, in that instance, 34 successions, and they're just not going to pay for it. It's probably they probably spend more money in succession than maybe the property is even worth.
That's what happened. That's exactly what happened.
But inheritance tax too is very high too, right?
So with inheritance taxes, the good news is if it's a relatively small estate, there's no inheritance tax in the state of Louisiana. And now I'm kind of going out of my comfort zone with this next statement, but I'm pretty sure it's correct. There's a federal tax a federal inheritance tax, but the estate has to be of significant value.
Okay.
So generally you're going to avoid an inheritance tax. Where you're probably going to get hit with a tax is going to be on a capital gain. And again, I'm not a tax attorney. Big disclaimer, if we could, put that little thing at the bottom of the screen or whatever. But usually what will happen is if you, let's say, inherit something valued at $100,000, you then turn around and sell it for $120,000. That is a $20,000 gain. And then I could be wrong, but my basic understanding is the capital gains rate is 20%. So 20% of a $20,000 gain, the step up value. I'm horrible at math, but that would be your tax liability when you sell that property. Now you could sell property at a wash. Let's say the value of the property when you inherited it is $100,000 and you sell it for $100,000, or you sell it at a loss for $80,000. Well, now there is no tax, is my general basic understanding. I could be wrong. Check that out with a professional. And maybe you could use that to your advantage. But you need to watch out. Always talk to a tax professional, not me, whenever you're selling inherited property. I was going to clear
that too. Peter means he's a professional, but talk to a tax professional.
That's right. But talking to enough tax attorneys and CPAs, I kind of run that by them at the table, and they're usually nodding their head like, that's generally.
Look, after this one, we're going to have a tax attorney on there. Everything. And Pete, what did
Peter
say?
What that guy say? He doesn't know what he's talking about. Stick to real estate.
Yeah. But, like the biggest thing is, like when people in a relationship get married, and then the biggest thing is like in a divorce.
He
wants to know how much of that $275,000 house he can keep.
Okay. This is huge. This is so common the biggest thing that comes up with marriage and divorce is you have two people that own the property, and then they're gonna divide the property, and both of them may be on the loan. Okay. Yeah. And so now that they're parting ways, one of them is gonna keep the property, and maybe they want to keep that equity as well, and they need to pay that other spouse their half of the equity, okay, that's been built. And also that other spouse, keep in mind, if they're on a loan for a home that they no longer live in, they want to get off that loan. They want to get from underneath that debt. They don't want it to affect their credit score or their debt to income ratio. So what is very common is we will get requests from lenders for people that want to do refinances of property. And the goal is twofold. One, to refinance that property under just one of the person's name who's going to keep the property. And two, potentially cash out some equity to pay that other person off, you know? But where things get real tricky is, what if there is no equity? Or better yet, what if there's just enough where there's something there, but not enough to qualify for like a cash out refi? And so you get these awkward situations where, you know, it doesn't make sense to refinance. Or what if interest rates are super high compared to where they were? And, you know, you just have. Yeah,
that was going to be my question is, you know, back in 2020, 21, 22, we had rates at 2.93. Imagine today somebody gets a divorce and, you know, the husband wants to stay in the house.
Right.
Wife wants to leave. She wants to get from under the debt, right? Because she wants to go and purchase her new house, right? And what do you do?
Talk to a good loan officer and hope that they can either figure it out or that you've got equity, or, you know, maybe you even.
That's the thing. They don't have equity.
Yeah. What if you're upside down? You know, refinancing doesn't make sense. You know, just to get your former spouse up from underneath the debt. So, you know, that's problematic. Here's another thing. Here's like a good public service announcement. It is not a good idea to co-own property with somebody unless y'all are investment partners and maybe you're doing it under an LLC. I do not recommend that unmarried people purchase property together. Now, that may be controversial, but I'm just telling you from experience, anytime I do a closing or people are not married,
they almost always have to sell
I get a call about 6 months later, and they are like, how do we get from underneath this situation? And
why is that? I feel like the rule is like literally within a year, they're calling you to sell the property. And of course, they never got married.
Right.
They are still boyfriend and girlfriend, but they decided to get on a loan together. I think. Anyway, I'm gonna keep my thoughts to myself.
Oh, Mr. Sayoto, what is it? What do you think?
I think that's bananas.
It just, unfortunately, more times than not, it doesn't work out. And I know this from experience because, one, I'm looking at it and I'm always thinking to myself, like, I hope it works out. Now, a lot of times people are, let's say, engaged.
Would it be hilarious? Peter would be that person. Y'all signed everything. I got my check. Hey, hope it works out.
I would never say that. You want to know this funny? Something that I also never tell people. When I'm doing title exams, I'll see like cursed properties. Okay, not like ghosts. Maybe there are. But I'll see a purchase and then a divorce and then a purchase and then a divorce. And then a purchase and a divorce, and the two people that are divorced are sitting at the table, you know, or they came in like one after another because they wouldn't sit in the same room. And this new nice little newlywed couple is sitting there, and I'm thinking like, man, I hope y'all can break that chain, you know, like
I've actually had people say that where they purchase houses together and then they get to know people in the neighborhood, and they'll tell them how, like, man, I hope it works out for y'all. Everybody that buy that house, like they get a divorce. You know,
but I would never tell somebody that because I feel like I'd be planting like a seed.
Yeah, I mean, I would want to know that.
Right? You wouldn't know that.
No, I don't want to know that.
You would?
Yeah.
You wouldn't want to know that? Peter wouldn't want to tell you that because then you might decide you're not signing today.
That's what I'm saying. But I know, but he's not going to be in, like, I don't want to.
Yeah.
I don't believe in the stuff like that anyway, but I don't think it would really change anything.
Yeah, you would be the type of person, like, you'd want to know it
and
then just be like, I don't even care if my wife is beating me. I'm sticking through to this till
Yeah,
the end,
it's
to the
childish.
bitter end. I
Yeah,
don't
I'm
care.
taking the child, But what else? Now maybe forget what I
You
was saying.
paused and looked at me like I was the problem.
Look, if you're a battered spouse, like there are hotlines to call. Like if you need help, just reach out.
Yeah, what do you do? Pizza orders, huh?
Yeah, but if you got let's say if you get like if you're in a marriage, can you like sell or refinance the house without the other person knowing?
Well, it just kind of depends. If you can purchase property while you're married as your separate property, and that's actually pretty common to do that, even without a prenuptial agreement, or in Louisiana we call it a marriage contract. So let's say that you want to purchase property, even though if you're married, as your separate property, then only your signature would be required to sell that property. Also, for inheritance rights, there's a big difference. When it's your separate property, only your descendants, if you have children, would inherit that property,
Okay.
without a will.
Yeah.
So where that comes into play is, let's say that you inherited property while you were married from your parents. That's considered part of your separate estate. And if you passed away, your spouse would not be entitled to that property. Your children, if you had children, would get that property.
And the divorce, that property wouldn't even be in the divorce also.
What's interesting is I want to, the answer is sort of, because I'm
It
not.
depends on what they do with the asset,
Well,
right? With the inheritance.
that's right. And I'm not a family law attorney. Okay. So always consult a family law attorney. But my take on divorce is everything's on the table. Okay. So even though technically that might be your separate property, you might be able to use that as leverage for something else that you could use that. But it is your separate property. But let's say, you want something that your soon to be ex-spouse has. You could say, all right, look, I'll give you this, you give me that. So that's why I don't want to say it's completely protected like during a divorce, because when you're doing a community property settlement, it's all about negotiation. So you could potentially use that to get what you want.
Okay. Yeah,
I think we're going into investors.
Yeah, we can go to
yeah.
investors.
So first time real estate investors before buying.
Yeah.
Any advice for them?
I mean, I'm always gonna say it's good to have an agent. It's good to have a realtor to work with. I just find, because especially in Louisiana, I think it's good to have, unless you are a real estate expert, I think you need some help in your corner. And I think if the seller's not paying that commission, the amount that you would pay, you're either going to break even or get back in how these contracts are negotiated. First time investors, get a good title attorney, because there's so many things, like maybe setting up an LLC, making transfers from your personal name to your LLC to protect your personal liability from any potential like damages that would take place on your property. Get a good attorney. Get a good local lender. I'd recommend get a good local lender that you can work with, and get a good realtor. I think those three things in your arsenal are going to just make life easier. You got your money, you got your expert with the comps, the real estate comps, and then you got your title guy, me, when you have some legal questions or you need something drafted, or that's what you want to surround yourself with. I mean, kind of the first answer.
I'm looking at this second question. I'm actually laughing while reading it, because it says, why do some investor deals turn into nightmares? They turn into nightmares because they want to pay cash and don't want to pay for stuff that would literally protect them. It's kind of like what we were talking about earlier, where the guy could have had title insurance, $500, $600, $700, and he decided not to, and then it cost him a lot more than $500, $600, $700.
Yeah, but let me ask you this: so in the insurance part, let's say you said, so it's the 25,000. So the insurance, I take title insurance. How much that would probably like? So you say $500-$700 for a title insurance, for instance.
No. If I didn't even offer him title insurance. I was just going to do what we call a title opinion letter. I carry errors and omissions insurance. So if I'm going to render a title opinion, I'm on the hook. okay, or me and my insurance company, we're on the hook. So you've got protection. And that's why I like to say you can get layers of protection. So you've got the attorney that's going to do the work, but then you have this title insurance policy. In that instance, on a $25,000 cash sale, I mean, your title insurance is probably only going to be like $200 or $300. So that guy, if he had paid that, he could have just had a check written to him for $25,000. Now, backing up, if I had done the title exam,
Exactly.
I would have seen, hey, whoa. There, not only is there a mortgage on this property, but it's in foreclosure. So like,
So keep in mind, he didn't even pay for Peter to do the
That's
work.
right.
So Peter has to offer it to him and say, hey, for me to protect you and make sure it's clean, right?
Yeah.
I need to do the work. It's gonna cost you about $300,
Yeah.
right, for me to do the work.
that's right.
But it would have avoided.
Yeah.
He would have
Yeah.
caught it
Yeah.
because he's not going to do the work for free.
I feel like with my investor clients on commercial deals, if they can just kind of bake into these costs of protection, just make it part of your, like if you're putting pen to paper on the math, just include that in there.
Just plug it in.
And the reason why is it's just good protection. Also, if people are flipping, you know, you don't want any holdups on that process. If you got a tight timeline, okay, I'm gonna get a loan, I'm gonna make these improvements, but I need to bail because I don't want to keep paying this note. Spending a few extra $100 to make sure that you get a guarantee to sell that property with no issue, that is worth it. Because I've seen instances where people avoided maybe paying a few $100s, and then there was a title issue on a flip, and now they're paying this outrageous note that they did not intend on paying while this title issue, you know, existed. And at the end of the day, they had to shell out more money to resolve that title issue, all the while they're paying this note, and it just ruined their whole business plan for this flip, you know, and it all could have been avoided. Like, hey, just extra $100 into that model, you know, however you're putting your plan together, and just chalk it up as that's the cost of.
Yeah, sometimes people usually would take those chances because you always go in it like nothing gonna happen till something happen. Then you realize $200 was not that bad when you lose
When it's all said and done.
Yeah, when you lose $10,000, $15,000, $20,000, you realize, man, I could have paid $300.
Right.
Or my problem would have
Imagine,
solved
yeah.
right now. I wouldn't have to deal with
Don't
it.
think about that like Hector's thinking about that $275.
That's right. I was waiting for him to bring it back up. He probably will. I find, you know, culturally, I find that different cultures are more, I don't know, just like on the barter scale, or as far as trying to cut costs, which is smart to some degree. But I do find that plays a role in the transaction, because I'll have some clients that I just know every single time I talk to them, it's going to be a fight. And I'm like, guys, look, just bite the bullet and do it. You know, pay that extra money. But they're like, no, it's worth it. You know, it's worth saving that $300. You know, that's what we pay you to do, Peter. You go search that. And they're right to some degree, because here's the big question that I get. Let me get this straight, Peter. I'm going to pay you to do some work, and you're going to go check my title, but you want me to pay more money for somebody else to check your work? You know, and that's actually a pretty good question. But it's a very complicated answer.
I'll give you a perfect example to that, and you could probably use this too, because we have several people looking at our files, right? And we always say compliance. Yes, I've been doing this for a very long time, but there are times where I go back and I'm like, yeah, totally messed that up, right?
Yeah.
So even for Peter, who's been in the business and been doing this for 20 years, Peter could make a mistake, but I guess that's when they look at you and say, well, you're going to own and pay for your mistake, right?
That's right. And keep in mind, I'm also relying upon the abstractor, okay? They have insurance. I'm relying upon the clerk of court to index these documents, right? Because they make mistakes. I just ran into an issue. It was resolved today, but it was an absolute mess. The clerk misspelled somebody's name. The abstractor missed a judgment, and it caused, I mean, just a huge commotion. It was very problematic. But you know what ends up happening is we have to rely upon other people to do work. And I guess with the law, there is kind of a gray area. Maybe attorneys will disagree about whether or not there is a title issue or not. I've had that problem come up where I had a client, they paid for title insurance on this very kind of gray area of the law. And when they went to sell that property, the other title attorney across town in Lake Charles, they said, this is bad title. And I said, no, it's not. It's good title. And we came to a disagreement. Now, I had this client of mine had another layer of protection, and it was a title insurance policy. And that title insurance company had said, like, no, like, Peter's right. We had already pre-approved this, and you have protection if anybody gives you issues. But the only reason why I bring that up is it's good to have extra protection in the event that some guy across town is saying your title's bad, and therefore I'm not going to let my buyer purchase your property until you fix that. And you're like, wait, hold on. I already paid an attorney to fix that. You're coming to me. I'm like, hey, that person's wrong. And you're like, well, now what? Well, in this instance, I say, well, if you need to make a claim on your title insurance policy, do it. That is I don't want to get too far in the weeds, but I think the takeaway is, especially with commercial investments, get your layers of protection in line. It's really not as expensive as you would think that it's going to be. And ask these questions on the front end. How much is this going to cost? And does that make sense? And also, does it make sense to save $300? And maybe it does, to then, move forward without that extra layer of protection.
In talking about extra layers of protection, I know we talked about marriage and divorces. What advice do you have for people, friends and family who are interested in making real estate transactions together?
If you can set up, if it's going to be commercial property or investment property, I think doing it under an entity like an LLC or possibly a corporation, which is going to be a little more complicated. By doing it that way and having an operating agreement, that helps in the event that individuals are going to part ways. If you're going to avoid having an LLC or maybe like an entity that's going to own the property and you want to individually own it with, let's say, a friend or a spouse, you technically could have a marriage contract set up that designates the property as separate property. People aren't really going to like to hear that because, till death do us part. But there are ways to own property where it's not considered community, which may make things easier if you passed away and wanted your kids to inherit. And there's all these different ways to go about it.
But as far as like if you have friends who opened up, I guess that would be your advice, right? If Hector and I say, hey, we see some investment property that we want, you would suggest putting it into an LLC or corporation, right?
Yeah.
And then doing all the things.
I think so, or at minimum a partnership, but something that kind of on the front end lists what's going to happen under worst case scenario, that you guys suddenly aren't agreeing. Are there rules of how we can move forward in this venture? I mean, that would probably be the smartest idea. And I think it is good to own commercial property or investment property under like having the protection of an LLC, just to avoid any personal liability.
Yeah.
What's nice is, I say you always want to get a title exam. I get this question a lot. A lot of times people will purchase property individually because they can get like a loan at a low interest rate. Or maybe they just did it. Hey, I picked up, I started purchasing property before I kind of thought about, well, wait, maybe I need to have an LLC. If you yourself are going to transfer property to your own company, like a sole member LLC, I don't recommend a title exam. I'd say, hey, look, we're just going to go that notary route, or I'm just going to draft a quick transfer, and we're just going to transfer this real quick. And it's real inexpensive. I get that question a lot because people will purchase property and have paid, a couple $1,000s, and they're like, hey, I really want to transfer this to my company. Are you going to charge me $2,000 again? And I'm like, no, don't worry. It's going to be like $200, it's going to be cheap or a lot cheaper.
Transferring it to Hector.
Yeah, because I'm like, hey, look, I mean, I can do a title exam. I'm happy to do it, but I mean, you should know about your judgments or what's going on in your life, so I don't think we need to do it. I'll never discourage you from putting money in my pocket. But I will give you, some good sound advice. I mean, I don't want to take advantage of it, right? But if you really want to, let's do it.
He does say, I'm never going to stop you from putting money in my pocket.
Right?
That's a good. But I mean, right now, so I'm gonna the next question. I really like this question. Like, what real estate scam are coming right now?
Yeah, well, we talked a little bit about that vacant property, cash sales, quick cash sales. That's like a big red flag. The scams that we're seeing, pretty much, I mean, on our end, and I get this call from realtors. They'll have, usually it's going to be high-end property. It's going to be like $1 million listing. And they'll have somebody from out of state want to put an offer in, and they're going to send a $10,000 or a $50,000 deposit. And they're like, we're ready to roll on this. Now, you never want to give up $1 million listing. Like, what if this is not a scam? You kind of want to see this out. So what I always tell those agents to do, I say, look, the true way to find out if it's going to be a scam or not is if that money hits the bank account. And I have an escrow account, all right? So what we want to do in that instance, you're going to give a $10,000 or a $50,000 deposit? Let me send that money to me. Like, so in other words, I'll tell the agent, hey, this sounds great. Sign this contract and send that deposit over to our preferred title company. Now I'm waiting for that check to come in, and I know what's going to happen. That check's going to come in, and sure enough, it's going to look like a cashier's check. Yeah. And I'm going to deposit that into my account. Now, the scam is, hey, we're going to cancel the contract. Please return the deposit, or wire the money to this account. What they're hoping is I'm going to cut that check before those funds clear out, right? And I know this game. So sure enough, 3 to 5 days, business days later, my bank calls me and says, hey, that check is no good. And then from that point on, the scammer, either they ghost us or they're like, well, hold on, no. That's an error. We're going to send you another check. And at that point, I just say, hey, look, no check, send me a wire. Because if that money hits my account, I've got that money, all right? And now that means they've got skin in the game. Okay. They're not going to send. Although I will say one time, I felt so bad for this client because I still work with him. He's a commercial guy. It was in Abbeville, Louisiana. It was in Vermilion Parish. It was an $800,000 sale of a gas station. And there were no realtors involved. And both the buyer and the seller were out-of-state people, okay? And I was so skeptical of this file. I don't want to say that I mistreated the buyer, but I will say I didn't roll the red carpet out for him because I was certain that this was a scam.
This ain't going through.
But he sent $100,000 that actually cleared our account, and I was like, you know what? This is actually a legitimate transaction. We need to not apologize and actually work on this file.
And that's legit.
And I did. I called her. I was like, hey, look, I just wanted you to know. I totally thought this was a scam, but we're gonna take care of you, But you get 10 bad ones and or 15, and then there's that one.
That recently happened with Jordan and I on a deal that we had at your office, and the guy was like, Jordan, when you started pulling the stuff on the guy, it's just like, dude, I don't think this guy is legit. And he keeps calling us and he's on different time zones, and then he tells us he starts sending us random pictures of where he's at on his vacation. We're like, what does that have to do with you buying this house though? Yeah. Right. And sure enough, it wasn't until his deposit cleared. We're like, oh my God, it
It's
actually
legit.
might be
It's a big deal.
Like I don't know if we were the nicest people.
Yeah,
Right.
I'm saying like that's why he was sending all this picture. I'm him. He's trying to tell you, hey man, I got
Yes.
it like that. You know, you're trying to avoid the man like
Man,
that.
look, they all send pictures, all right? They send in pictures, they send in IDs.
Only picture I want is a picture of the cashier's check.
Yeah.
Thank you.
I want to see a picture of that money in our escrow account that actually cleared. And then I'm like, all right,
Speaking
we're
of
good,
money and
we're
the
good.
like deposit, like the weirdest, I don't know, has this ever happened to you? I asked somebody for a deposit, or no, I needed proof of funds. Why they sent me a picture of their safe with all their cash in it?
Oh, it might be a fake one.
Might be.
No, I don't think it was. It wasn't a fake one. But I was like, that's so weird.
But some
That's
people like so
interesting.
you know some people like
And he was a pastor,
ooh
and they had like guns and stuff. And
they got money like that though.
I'm like, what
right.
else
I mean,
are
pa-
you
yeah,
doing?
There was
Deacon Vadim, what
yeah,
else you doing over
they
there?
had a pastor. They found like cash when they was working. Some guys come and work in his bathroom, and then when they hit the wall, and then the cash was falling out the wall.
Wait, are you just making stuff
No,
up
that's
over there?
legit story. That's straight
Where,
up.
Tiffany, where you got that from?
I mean, Google it if you want to. I'm just telling you straight up.
Yeah, I think
They
that's
got
an
money.
old story.
They got money like that.
Well, look, cash technically is certified funds, which we're looking for certified funds, which is going to be either a wire or cashier's check. You could do money orders. Okay, we could do that too.
So you would or would not accept the picture of the safe? Or what you saying, Peter?
Well, fortunately, I don't have to. I'm never in that position. I mean, if I'm looking at a picture of a safe, what I want to see is a picture, like I said, of that money in our escrow account cleared, and then I'm going to feel comfortable. But this is a big misconception when you've got, I guess, pastors around town that have all this cash. They want to bring it to the table. And I'm not going to accept it unless it's less than $2,500. And there's a few reasons why, but the most practical reason is, could you imagine somebody walking in with $100,000 cash, the security risk?
Or better yet, now you have to go take it to
Okay.
your bank.
So and here's a rule of thumb. If you walk in with $100,000, right? What that means is I have to count that in front of you, because the second I leave the room and that comes up short, guess what is assumed? I took that money, okay? And so I have to count it in front of you. I'm looking over my shoulder, waiting for, people to rob us, okay?
Yeah.
Because people get robbed for much less than $100,000, all right? And so I regularly have to tell people, look, we can't do that. Now,
They're seriously trying to bring that kind of cash to the
yeah.
table.
Oh,
I mean,
all-
I have people
all the
ask me
time.
that too, but
All
I've
the
never
time.
got the impression that they were trying to bring cash.
We've figured out ways to get around it. This is the best offer I'm going to give. Take your cash.
Hector needs to listen to
You
this.
ready? Okay, Hector. Look. First, you break the wall in your bathroom.
Yeah.
Okay. Then you get the cash.
Yeah.
Okay. And you bring that to the bank, to my bank, and my bank is then going to tell me, hey, guess what? He brought $100,000 and he deposited it into your escrow account. You are good to go. And so that is a way where you could bring cash to a closing. I mean, in theory, but basically you could take money, deposit it into an escrow account that a bank is going to make sure is legitimate, and then we can proceed with that transaction. I am unaware of any issues with, if somebody wants to put cash in my account, my bank clears it, well then good to go.
I mean, Pastor Juski will come up with that money.
Wait, you don't really, you're not, are you a pastor?
No.
Okay.
hell no.
Do you have cash
that-
in the wall of your bathroom?
That really happened to me, and the guy happened
Okay.
to be a pastor.
Yeah, it might be Juski. It was probably Juski.
Did you see that skit? That was
Yeah,
hilarious.
that was funny.
Yeah. So
So answer this, Peter. What do you have any issues that are unique to Louisiana title wise?
Louisiana is unique because of the civil law that I was talking about. I think that out of state people are a little nervous whenever they're dealing with Louisiana, because we have terms like usufruct or naked owners or succession, instead of probate, life estate, and these are other common law terms. So I think that what I find is there's a lot of title mistakes that are made in Louisiana by out of state, let's say big banks or big actors. And when we call them and we tell them like, hey, your title is messed up. You did this wrong. They don't understand why, because it worked everywhere else. Why not?
Yeah, because don't we have like laws in Louisiana that like haven't been changed since like what the Louisiana Purchase? Like,
Yeah, we got the Napoleonic Code, and we actually have more in common with the world, okay, with how the rest of the world practices law, but less in common with states, which is kind of interesting. So it's not as crazy as you think. The rest of the world's got generally like similar.
well, the U.S. thought it was crazy, right?
That's right.
Louisiana,
That's right.
like, nah, we're good.
No, we're doing our own thing, but it's kind of nice. I mean, I guess in one hand, if you're a Louisiana attorney practicing law in Louisiana or authorized to practice law here, you got to go take the bar, and I guess I don't want to say you're stuck here, but you got your niche, and then if you're an out of state person, it's probably real intimidating to want to go practice in Louisiana. Like, I got to go learn this whole new vocabulary. So I like it. When I'm talking to out of state attorneys, I can just tell, even like the real cocky ones, they don't know what's going on down here. So they kind of back off a little bit. It's nice, like they can't.
Louisiana's like it's a
showing
little
off like, where I'm from, man. I'm from Louisiana. That's what I mean, like that.
You don't know what it's like down here. So it's cool. It's unique. Like, it's fun being different.
Yeah, but but I hear like hurricane and flooding, in Louisiana. What is like, I want to say, the complicated property ownership due to this?
They had I say recent, there are a few special provisions in law. There's been changes made since Hurricane Katrina and Rita that have allowed for easier transfer of real estate because of so many people that left the state and didn't come back, and property that was just destroyed and just sitting there. So there are legislative changes that take place to make the transfer of real estate easier for, when catastrophes happen, like hurricane.
Yeah.
So we kind of run into that a little bit, but I mean, there are measures in place to try to make it easier.
I think that kind of goes into the next segment too. And when you talk about what should new homeowners know about buying property in Louisiana, I think the biggest thing is flood, right?
Yeah, I mean, flood insurance. Yeah, there's this misconception that some people will say, I'm not in a flood zone. Well, everybody's in a flood zone, but some are preferred and some are not. And if you're in an unpreferred flood zone, you're going to pay more for flood insurance. Now, you don't have to get flood insurance, but a lender is not going to loan you money if you're in one of those preferred flood zones without mandating that you get it. Obviously, homeowners insurance is recommended. It's going to be required if a lender is involved. Flood insurance is only going to be required if you're in one of those unpreferred flood zones. And then if you're a new homeowner, there's something called homestead exemption. You get a break on your property taxes. The threshold is $75,000. So basically, if your property, let's say, is worth $100,000, then what you do is you take $75,000. You get to subtract $75,000 from the value of your property, which leaves $25,000, and then you multiply that by a percentage of the millage where you're located, and that establishes your parish property tax bill. There's also other exemptions. They have disabled veterans, like tax advantages. They have a senior freeze. And I think relatively recently there was something passed where if you're a first responder, you get, I think, some tax breaks on your property taxes.
Aren't you a first responder?
You first responder? I'm pretty sure that you get some type of property tax.
If you ask my job, it would tell you yes. But if you ask me no, I'll tell you no.
I don't know what qualifies. I immediately think of police officer.
I mean,
I consider myself a first responder.
First responder.
A million calls, I'm probably the first to respond.
I don't know. They should count, but I'd have to check the statute.
Oh, if we're going like that, yeah, I'm a first responder.
Yeah, come up with something.
If you save me a tax.
But yeah, a lot of people are surprised to kind of find out that you do get tax breaks on your primary residence. You know, they're back in the day, man, this is a long time ago, but every now and then I'll get this question. They'll say, because it's like like my first home, do I get a tax rebate? And I mean, this is kind of showing my age, but I want to say, you know, way back in like 2010 or 2011, they were given like $7,000 of a refund if you were a first time homeowner.
Wait, what year was this?
This is a long time ago. They basically, I want to say when the crash happened in, you know, 07,
I think it was like,
they were trying to incentivize people, you know, to get into homes. And they're like,
for...
we'll give you some money if you do it. And every now and then somebody will ask me that question. And I'm like, unless you just read something, I haven't heard about it, you know, but.
If so, we'll all go back in that paperwork.
Yeah.
Wait. You see how I get this refund.
That's right.
So what is the biggest myth people believe about buying a home?
Wow. What is the biggest myth? I think a big myth is that it's impossible or nearly impossible to purchase a home. And I mean, I know that, and the only reason why I'd say that is there's so many people that rent and they're paying so much in rent, and what they're getting is so much less than what they'd get if they bought a home, and they'd be paying less. But the bridge that they have to cross a lot of times is putting this down payment. And so many people, my credit's not good enough, or I can't put that much money down to purchase a home. But like I mentioned, there are situations, loan programs, where people will get into a home and bring $0 to the table. And there are ways to repair your credit that good loan officers are familiar with. And so I think that if you want to own a home and pay less and get more and build equity and have this wonderful investment, if you just talk to the right people, I think that you can break the myth of it's not for me, you know, or I don't have enough money. That's what I'd go with.
You know what? So I always say, like, the first time I was buying my house, right? And, you know, I never owned a house before. I'm from Haiti anyway. So I was so scared. Like, I was like, because now, you know, when you got a landlord, you just call him. Hey, AC went out. Oh, you know, toilet not working, whatever the case may be. Because you're getting somebody you can call. And now it's just like everything is on you. And I remember I was buying this house, and I know the guy, and I was like, man. And I was trying to tell him, like, everything I need to know, like, you know. And it was like, trust me, by like 2, 3, 4 months, you're not even going to be worried about it. I was like asking him all kind of questions. Yeah. And then now I feel like a pro. Like, I'm not even worried about it no more. But
he's a pro until something breaks again.
No, I fix pretty much everything in this house. But like, yeah, but I was so scared. I was just like, you know, what about this? What about that? What this happened? You know, I was like, he was like, for a second, he can see I'm kind of like, you know, stressing out about it. He's like, man, trust me. Just give it some time.
Yeah.
Everything's going to be all right.
And when I hear what people are paying for rent, like let's say, you know, $1,500 or $1,000 or, you know, $1,100, whatever, $1,000, and then what they pay on their note, and they're paying so much less, and they're getting so much more. And in addition to that, they're building equity. Yes. That is just, it's a beautiful thing. It's
they got
cool.
They got two different things about it, though. Some people would say, man, rent, because it's just easy to just get rid of it. Like, you know, I'm not paying no more. But some people would say, like, owning a house, like you said, that's a good way to look at it, because you build equity on that house, and then, you know, you're building so much money, you're not losing really money. But then if you own a house, if you rent a house, apartment, you can always, like, okay, after my 1 year,
you can,
you know,
And you're in circumstances, you know, they do change for people where you're right, purchasing, but then needing to get out. You could find yourself in a really tough situation where maybe you're losing money because you're having to sell, you know. But if you are comfortable with you know, where you live, you think it's going to be a while, it's crazy to rent.
As long as like I have a client right now where when I met her, she actually wasn't my client. She was another agent's client, and she had a contract on one of my properties. And I got to know her over time, and I just remember like saying, like, "Why are you buying?" Because she's telling me all the things about her kids, and she got divorced, and she moved here, and she's only really here because of her son wanting to play baseball, and her son's a senior this year. But she also mentioned that she would move somewhere else, and I'm thinking to myself, like, why would you?
Yeah. Why would you
buy? And like right now, we have her property on the market, and she just bought last year, and it's not
right.
like she would have to bring a good bag to the table. This is a perfect example, though. One of the questions you have: if Hector was buying his first house, you're his friend and title attorney, what would you tell him? He comes to you, hey, I got this really good deal. I want to buy my first house. What's your advice?
Well, I mean, I think it's all circumstantial. It just kind of depends on, you know, what are you plan on staying here in town for a while? Are you like, what's your job situation? Is it, you know, so that's important, just like you mentioned, because if you need to, if you're transient and you're, you know, maybe going to move in a year, that's huge. As far as I'd probably say, if you're going to do this, I wouldn't automatically assume that it's going to be a great investment. You may not want to, it may not be a home run, but if you believe that you're going to be here for at least, let's say, you know, 3, 4, 5 years, like you're pretty confident about that. What's rent look like? What's your note look like? What are interest rates looking like? Let's compare those things. Is it a seller's market? Is it a buyer's market right now? It's kind of a buyer's market. So you probably be in a good position. We want to go over all those factors and not just make like a quick decision. Now, if you've got somebody like Val telling you this is a slam dunk, you know, buy this, they're $50,000 under the fair market value, you know, yada yada, and the interest rates are decent and it makes sense. Well, you know, then maybe you want to take a chance on that. But it's all circumstantial. You know,
aren't you looking back now and saying, "Man, I should have called Peter on my first purchase"? I mean, he would have been your first responder.
Yeah, he probably would.
But
I mean, it worked out. I mean, I end up, to be honest with you, love this house, and then the hurricane happened, destroyed the house. Then when we built it, so I built it like my way.
Yeah.
So now it's just like it's like the way I want it. Everything I wanted. I mean, not everything, but it make better than when I bought it.
Yeah.
So I like it. I love my house.
I mean, so how's home ownership been for you? Do you recommend it to people?
Yeah, I mean, if you can afford it, yes. I would say, yeah, if you can afford it, yes.
But he likes to decorate too. Can you tell?
It's nice.
Yeah, I make it. I mean, because like to me, like so the whole thing about my house is just, you know, growing up in Haiti, you know, third world country. It's just I never like, man. I'll be like, man, that's shit I used to see on the magazine. You know what I mean? I'm looking at this flipping picture. I'm like, man, I wish I could have that. So when I got here and I can buy a house, I was just like, man, I'm trying to do it, you know, the best, like something I dream about as a kid. I know it's not like it's not the best I could get, you know. I would have to have $1 million house, but, you know, we're not there yet.
He's going to get there too.
Yeah, you know what I mean? But at the end of the day, the fact that this is my first house and I wanted to make it like something I really feel like every day when I open that door, like feel cozy, feel mine, feel this is my house. So I'm really happy with, you know, when I come in here, I can sit here. And then if I don't decide to go nowhere, I don't have to go nowhere. I got everything I wanted, you know, as a kid. And then my kids got a chance to be living my dream in a sense, you know?
It's a beautiful thing.
You're going to have to watch the podcast with him and Hugh on there. Like when him talking about like being a kid and having those books and mag. Who would have thought he could have his own house with his own Haitian king rug?
I mean, look, there is this misconception that people will try to fight with me at the table, and I'll say, congrats, it's all yours. You own this property. And they'll say, no, I don't. The bank owns it. And I'll stop them. I'm like, absolutely not. You own this home. Now, you have entered into a contract to pay a loan off, and you have given somebody the right to potentially come back and try to take ownership from you in the future if you breach your obligation. But as far as ownership goes, this home, this land, this is yours. And the beautiful thing about the United States and the Constitution is there are powerful rights that are given to people regarding land ownership, and the rights that you have on your land, on your home. So, don't let anybody ever tell you this isn't your land or your home. And I don't know if you have a mortgage, but this is a beautiful, powerful thing. And when I'm sitting at the table and I just watch how excited people are, and even the sellers, to make money off of their sale, I think about what other attorneys do, which is generally going to be centered around injured people, divorced people, insurance companies, death, just generally unhappy topics. And I'm living the dream, man. I get to be surrounded by just wonderful events on a daily basis and smiles, and it's great. It really is great.
And it's entertaining too. Don't forget that.
It's entertaining. Yeah.
You know what? I never liked though. I just like taking pictures. Like I didn't like the fact that there's nothing for me. I didn't feel like it was a celebration. And I think like buying my first house, I didn't feel like I have to take a picture. You see how people take a picture and they try.
You didn't take one?
I don't like it.
Oh wait, do you regret not taking one?
No.
Oh, okay.
I never I don't feel like it's just another purchase. I didn't feel like I need to celebrate buying a house. I didn't feel like it was something I really accomplished in a sense. I mean, it was nice, but it's not like
when you purchase your $1 million property, you're gonna take a picture. Huh?
No, he gonna play it cool too.
He's taking all kind of pictures.
Because by the time
all kind of pictures and poses.
No, by the time I get to that, not really, because by the time I get to that, I can afford that. I would have so much money.
Are you listening to this?
I would have so much money by then. I'm just not even really trip about it.
I hear you.
Yeah, he probably be like, it's another, because there is a level of money. That means you got it. After a while, it just become regular. That's why those people not related to nobody. If you got money, millions of dollars for 10 years, you're not relatable to normal people.
Right.
You know what I mean? It's just like your life is different.
Well, the close-in photo is not mandatory. Val, I mean, if she might make it mandatory, just because you're stubborn and she wants to she's stubborn too.
Yeah.
And she can be like, we're taking a photo. But no, I mean, you get people that they're more private. They're like, hey, I don't.
Yeah. I mean, I don't remember. I don't post none of my accomplishment on Facebook. I haven't done that probably years. If I go on vacation, I might, because I like to. Only thing I would if I post a picture is because I like to wear clothes. Then I feel like, you know what? Yeah, I look good.
I like to wear clothes too. What are you saying?
I'm talking about fashion. I'll be like, oh yeah, I like the way I look today. I might take a picture of that. And maybe sometimes I do post it, sometimes I don't. Other than that, let's say if I buy a house or new cars, you're never gonna see that on Facebook.
Well, you are definitely the exception to the rule, because most people, I find, they're ecstatic and they want to make this big event out of it.
Yeah.
I mean,
it's
people.
good. I mean, if you feel like you accomplished the biggest thing in the world, yes. I feel like every time
you didn't feel like you accomplished something when you bought your first house?
No, I feel like because the minute and the way I convince my mind, the minute I do that, it's just
like on to the next one. What's
next?
Yeah.
I stop no. It's just
but you have to remember, I have this bad too. I think most high achievers have this really bad, where we'll hit certain goals and we'll forget to celebrate the small victories.
Yeah.
So you look back and you're like, man, I didn't take a picture. I didn't do this. I didn't do that. And we just have to take a moment and, you know, that old saying, smell the roses.
Yeah.
You also have to take a moment and celebrate the victories. Even
I don't
want
to dwell on it. I just feel like, okay, cool. You know what's like I just did that. All right, cool. I forget about it tomorrow. It's just like I don't want to dwell on it. What's the next one? Like, you know, get the next one, the next one, and the next one. So that's how I feel about it.
I respect that.
Well, Peter, we could be here all night, obviously. I think we're wrapping up. We're good, right?
Yeah.
Thank you so much, Peter, for coming to the show. You know, I
Yes.
love and admire you. So
Thanks so much for having me. I'm in the presence of greatness. The Haitian King and the Queen of Real Estate over here.
I don't know. You can't call me that. I think somebody else. That's like so many people's name these days, right?
I don't know. I mean, as far as I'm concerned,
There you go. There you go, Peter. We'd love to hear it.
You're an all-star. So thanks so much for inviting me out here. You know, real estate can be pretty boring to talk about, but hopefully we kind of, you know, livened it up a little bit. And hopefully somebody will get something out of this that's useful. Maybe we'll get them.
I think that was a great conversation. Really, I think it was a great show. And I really enjoyed the conversation. It was really flowing. I like it. I think maybe like, you know, a lot of people can learn from this. That's the whole purpose.
You're naturally inquisitive, though. So I think like anybody that comes to the show, like you always want to know people's profession, don't you?
Yeah.
If you find some interest in it.
Yeah, I mean, because I think like to me, I think I'm not the only one. You know what I mean? So if there is somebody like me that's just watching the show that's want to learn,
Yeah.
so I try to sometimes asking the right question because technically I'm not from here, so there's a different there's a lot of things I didn't know. Like the other day when we did the last show, when if you put your trash outside and you leave it there, they can call on you and tell you, hey man, you have to put the.
And all this time you were putting your trash out?
Yeah, like I can leave this trash wherever I don't want it.
Peter, we had a city councilman on, and he was bringing that up, and I saw your face. So
Yeah,
you're
I
not
don't
that
think it's just like, I mean, but I would never. You
Yeah.
know?
Yeah.
But see if somebody leave their trash, like I'm going outside, let me call the city council. You know what? This neighbor never bring their trash in. Like I don't think I'm that guy, but it's because of my background or where I'm from.
Yeah, yeah.
But when it's kind of like that's why I feel like I always put everybody else on my shoes. Maybe you don't know.
Yeah.
You know, maybe like the same way I find out. Maybe you look at the show, you be like, you didn't know that?
Yeah.
You know what I mean? Like I didn't, but somebody else would like, oh, really? I didn't even really know that. No, so that's what the whole purpose of doing the show, and I really enjoy
it.
having people like you. And thank you so much, so much for coming to the show. And if you like this conversation we just had with Peter, like, share, and don't forget to comment and let us know what you think of it. And if you feel like there's some question we didn't ask, let me know in the comment. And thank you so much for watching the show. This was the Haitian King Podcast. That was good.
It's always good.
What you think about